Today, we're delving into the fascinating story of Tata Consultancy Services, a titan in India's corporate landscape. From its humble beginnings to its current status as a global IT powerhouse, TCS has not only reshaped the industry but also left an unforgettable mark on the Indian stock market. As TCS celebrates 20 years since its historic IPO in 2004, we reflect on a journey that has been marked by consistent growth and innovation. This milestone isn't just an evidence of TCS success, it's a reflection of how it has helped define India's IT industry on the world stage. Welcome to another episode of Informed Investor. Today we'll be diving into the remarkable journey of TCS since its incorporation in 1968. We'll discuss the key milestones since the IPO, examine its diverse service offerings and vertical focus, and delve into its latest financial performance. Furthermore, we'll analyze the broader IT sector, identify emerging market opportunities, and discuss the future outlook for this IT giant. So let's dive in. TCS is a global leader in IT services, consulting, and business solutions with a strong presence worldwide. Founded in 1968, TCS began as a part of the Tata Group, one of India's oldest and most respected business conglomerates. Over the years, TCS has grown into a powerhouse, playing a key role in the global IT industry. Within the Tata Group, TCS holds a special place, showing the group's commitment to innovation and technology. The Tata Group is known for its diverse range of businesses, from steel and cars to hotels and telecommunications, and TCS is its shining star in the technology sector. The success of TCS reflects Tata Group's vision of creating long-term value for its customers and society. Globally, TCS competes with major IT companies like Accenture, IBM, and Infosys. Its services range from software development and IT consulting to digital transformation and artificial intelligence. TCS operates in over 50 countries, serving clients across various industries such as banking, healthcare, retail, and manufacturing. This global reach, combined with a strong focus on innovation, has made TCS a vital partner for businesses navigating the digital world. In India, TCS is a foundation of the IT sector, which is a major part of the country's economy. As the largest IT services company in India, TCS has played a crucial role in establishing the country as a global hub for IT services and outsourcing. This has not only created millions of jobs, but also significantly contributed to India's economic growth. Beyond business, TCS is deeply involved in social initiatives, supporting education, healthcare, and rural development. TCS' influence on India's IT sector is profound. It has set high standards in client satisfaction, operational excellence, and employee engagement. The company's strong performance, even during tough times, shows its ability to adapt to changes in the market. As TCS continues to expand and explore new areas of technology, it remains grounded in the values of the Tata Group, blending innovation with integrity. Now let's take a look at the key milestones of TCS since its incorporation. TCS started its journey in 1968 as part of the Tata Group under the leadership of F.C. Kohli, a pioneer in the Indian IT industry. Early on, TCS introduced offshore development, laying the foundation for India's IT outsourcing sector. One of its first significant achievements was creating CCOM, a computerized inventory management system in 1975. In the 1980s, TCS began expanding internationally, opening its first office in New York in 1979. It made a notable impact in the financial services industry by developing software for insurance companies. The 1990s marked a period of rapid growth, with TCS introducing a globally recognized software development process and becoming the first Indian software firm to earn ISO 9001 certification. The year 2004 was a major turning point for TCS as it went public and raised Rs 5,420 crores through its IPO, the largest in India at that time. This event propelled TCS into a new phase of growth. By 2008, TCS had achieved $1 billion in quarterly revenue, and by 2012, it became the first Indian IT company to reach $10 billion in annual revenue. In 2014, TCS reached a market capitalization of 5 trillion rupees, making it one of India's most valuable companies. By 2018, as TCS celebrated its 50th anniversary, it ranked among the top 3 most valuable brands in the global IT services sector and was recognized as the fastest growing IT services brand. Now, over the past decades, TCS has focused on digital transformation, cloud services, and AI, ensuring it remains at the forefront of technological innovation. Despite the challenges posed by COVID-19 pandemic, TCS surpassed $25 billion in revenue in 2021. Today, TCS stands as the global IT leader, embodying the vision and values of the Tata Group. Its evolution from a small division to a global powerhouse is a story of innovation, adaptability, and relentless commitment to excellence. Now, coming to TCS Business. TCS is an IT services, consulting, and business solutions company that has been supporting some of the world's largest businesses in their transformation journeys for over 50 years. TCS provides a consulting-led, cognitive-powered, and integrated portfolio of IT, business, technology, and engineering services. TCS has expertise across a wide range of industries, including banking, financial services, insurance, retail and consumer packaged goods, communications and media, manufacturing, life sciences and healthcare, energy and utilities, travel and hospitality, among others. TCS operates globally across all 5 continents, with North America and Europe being the largest markets for the services. Additionally, more than a fifth of their revenue comes from the emerging markets such as India, Asia Pacific, Latin America, and the Middle East and Africa. Now, what's driving TCS success? TCS earns over 90% of its revenue by offering IT services and solutions to clients worldwide across various industries like BFSI, manufacturing, communications, technology, and more. The company uses a global delivery model where work is handled through a network of delivery centers close to clients and talents across the globe. This model sets TCS apart by providing 24/7 support to clients in the different time zones, optimizing costs by up to 50% compared to traditional methods. Additionally, it allows TCS to tap into the cost-effective talent pools in India, Latin America, and other regions, ensuring high-quality services at lower cost. And if you look at the market opportunities, TCS has several key opportunities to drive and enhance profitability. First, there is a growing interest in cloud computing, with digital technologies and high-speed internet becoming more widespread. According to Gartner, spending on cloud services is expected to grow at a compound annual growth rate of 22% by 2025 as society increasingly shifts towards cloud-based solutions. TCS, with its strong cloud infrastructure, is well positioned to capitalize on this demand. Another significant opportunity lies in machine-to-machine solutions, which are driving advancements in wireless and cable communication systems. The future looks promising for M2M solutions with substantial revenue potential. TCS provides a comprehensive range of M2M services, ensuring they can meet the growing demand in this area. The transformation of the digital universe also presents a critical opportunity for TCS. As the world becomes more digital, businesses are changing the digital economy's dynamics. TCS' primary goal is to drive digital transformation by delivering advanced digital solutions, with an anticipated increase in technology spending for these initiatives. Lastly, TCS can leverage the rising trend in mobility solutions. With an increasing mobile workforce and growing use of advanced mobile devices, the demand for enterprise mobility solutions is expected to rise. This market has grown at a CAGR of 23.9% by 2024, and TCS is well positioned to benefit from its focus on developing enterprise mobility solutions. Now, coming to the latest financials of the company. When it comes to revenue, TCS had been seeing a decline in year-on-year growth rates for the past 7 quarters until last quarter. However, this quarter we see an improvement. Revenue from operations rose by 5.4% year-on-year and 2.2% quarter-on-quarter to Rs 62,613 crores. Analysts had predicted slightly less revenue, so this was a pleasant surprise. A big part of this growth came from a deal with BSNL, indicating strong growth in the Indian market. Looking at different regions, as we discussed above, TCS saw impressive growth in India with a 61.8% increase year-on-year. The Middle East and Africa grew by 8.5%, Asia Pacific by 7.6%, Latin America by 6.3%, and the UK by 6%. However, the Americas, from where TCS earns a big chunk of its revenue, saw a slight decline of 1.1%. But this decline is more modest than the previous 2 quarters, showing some improvement. In terms of industries, the banking, financial services, and insurance sector, which makes up to 31% of TCS revenue, declined by 0.9% year-on-year. But this was a smaller decline compared to the previous quarters. The consumer business and technology services sector saw minor declines respectively, with communication and media experiencing the largest drop. But the manufacturing sector showed strong growth, and the life sciences and healthcare, along with energy resources and utility sector, also saw positive gains. TCS operating margin, which is the profit they make from their core business activities, was 24.7% for the quarter. This makes an improvement from the previous year's EBIT margin of 23.2%, despite annual pay raise that slightly reduced the margin sequentially. When it comes to the new deals, TCS didn't secure any mega deals this quarter, so overall deal wins were lower compared to the last quarter and last year. However, the management stated that it is a timing issue with some deal closures getting spilled over into second quarter. Finally, the management is hopeful that fiscal year 2025 will be better than 2024. However, they did mention market sentiment remains same as last quarter. The total deal pipeline remains near an all-time high, but revenue from BFSI and North America may take a few more quarters to turn positive on a yearly basis. Now, let's understand the structure of the IT sector. The Indian IT sector is a broad term encompassing two major segments. First is information technology or the IT services. This includes software development, application management, system integration, and IT consulting. Indian companies excel in providing cost-effective and skilled resources for these services. Second is business process management. This involves outsourcing non-core business functions like customer service, human resources, and financial accounting. India's large talent pool and focus on quality have made it a preferred destination for BPM services. Together, IT and BPM form the IT BPM sector, a powerhouse contributing significantly to India's growth. And if we look at the trend of IT spending in India, it has reached from $67 billion in 2013 to $130.4 billion over the last decade. For 2024, the overall IT spending was around $145.9 billion according to Gartner. And being one of the largest offshoring destinations for different IT companies across the world, the Indian IT market is of considerable importance. And if the spending is huge, it does translate into significant revenue. Industry experts predict continued growth for the IT BPM sector. NASSCOM estimates the industry to reach $350 billion by 2025 due to the rise of emerging technologies like artificial intelligence, cloud computing, and data analytics presents exciting opportunities for Indian IT companies. And that's not it. The Indian IT sector's contribution to the country's GDP is substantial. Being at 5.8% in fiscal year 2009, it has grown to 7.5% of GDP, translating to a vital source of income for the nation. Furthermore, the industry is a major employer with an estimated 5.43 million people directly employed as of March 2004, contributing a massive 53% of India's service exports. TCS is a dominant player in the IT industry, particularly when compared to its peers within the IT software sector and the computer software large industry. TCS P ratio stands at 34.30, which is relatively moderate compared to its peers, indicating that while TCS is valued highly, it's not as aggressively priced as some of its smaller peers. TCS leads the sector with the highest market cap, which is more than double that of Infosys, its closest competitor. This solidifies TCS' position as the largest IT company in India, reflecting its extensive market reach and stable growth over the years. TCS reported a net profit of Rs 12,105 crores in Q1 of fiscal year 25, significantly higher than any of its competitors. Infosys, the next in line, reported Rs 6,374 crores. TCS stands out with an ROCE of 64.28%, significantly higher than its peers, with the closest being Infosys as 39.99%. This suggests that TCS is highly efficient in generating returns on its capital, indicating robust operational efficiency and effective management of resources. Now, if we talk about the future outlook of the company, TCS is in a strong position to maintain its leadership and drive the industry with its tech expertise, innovative solutions, and commitment to creating value for all stakeholders. If it continues using a future-ready talent pool and investing in emerging technologies, TCS promises to achieve an even greater success. The company is aiming for $50 billion in revenue by 2030, which would require a CAGR of 8.9% over the next 8 years, slightly lower than that of 10.6% CAGR it has achieved over the past decade. With a robust order book and consistent new deal wins, TCS is capitalizing on strong demand for cloud and digital technologies as companies invest in future growth. The management is confident that its investment in future technologies like battery management software for electric vehicles will enable participation in larger deals. However, we should also be mindful about the fact that the company has a high concentration of revenues, primarily in the BFSI segment, of about 31%. Demand for this sector in the past has been adversely impacted by the macroeconomic conditions. Challenges were evident in segment-wise and geography-wise performance during Q3 fiscal year 24, with degrowth in verticals like BFSI, technology and services, communications and media, and consumer business. In conclusion, TCS has firmly established as a global IT powerhouse, marking 20 years since its IPO with an impressive legacy of growth, innovation, and leadership. The company has consistently delivered a wide range of services across industries, showcasing its ability to adapt to changing market dynamics and technological advancements. With strong financial performance and strategic investments in emerging technologies like cloud computing, digital transformation, and AI, TCS is well equipped to navigate the evolving landscape of the IT industry. Looking ahead, TCS has set an ambitious goal of reaching $50 billion in revenue by 2030, a target that reflects its commitment to sustained growth and leadership. The company's robust order book and continuous stream of new deal wins highlights its ability to capitalize on the growing demand for digital and cloud-based solutions. Now, despite challenges, TCS focus on future technologies and expanding in key markets sets up for continued success. With a clear strategy, strong market position, and innovative approach, TCS is well positioned to remain a major player in the global IT industry. As the company builds on its legacy, it is ready to drive further growth and create lasting value, reinforcing its leadership in the technology sector. Having said that, this is me, Aditi Priya, signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.